Alright, so I have become aware, as many of you are, to current events. I went to class today, went to work today to shoot some content. You've probably seen some reels on my personal Instagram or even YouTube about that. But also this morning I day traded and I won and it was great. My strategy was working pretty well for today. I'll get into a little bit about that today, but elephant in the room, elephant in the country. The markets have hit the fan. S&Ps are now dropping below 500. Sorry, I had to do something important there. And I realized that my audience is a specific type of person, either a day trader who's been participating in the market for a certain amount of time, or new viewers who are curious about investing, or new viewers who are currently curious about day trading. Well, I'm gonna give you my breakdown as to how you should attack this news and be on the profitable end of it. Now, here's the thing. If you were to take month in advance puts just before this would happen, you obviously know something that I don't. Congratulations, you have won. For those that have heavy holdings in S&P indexes and major companies, we can talk about you guys. And also, if you're just strictly just cash account right now and are scared of the volatility, well, I can talk about that too. So I'm actually gonna bring you guys over to this side where I will discuss some of it sitting down, because I hate conversating standing up. Yeah. All right, I really hope the lighting is good, but if it's not, I'm sorry. I got a white screen in front of me with a couple of things of notes to talk about, so hopefully that gives my face a little bit of light. Well, I just lost some aura points there, but we'll live with a little bit more flash. So I sectioned it off. So I'm going to section this part of the video into 3 parts. One is I talk about long-term investing and what your mindset should be. 2 is going to be my day trading strategy to make sure I don't get wiped from this. And 3, I'll do the trade review. So number 1, we're going to talk about long-term investors. Now, if you had shares in S&P index, Google, Microsoft, Amazon, whatever it was, and obviously it tanked, here's what I am currently already knew, but something that's being reiterated right now in my accounting classes right now is what a sunk cost is. A sunk cost is a cost that you've just inherited with like a complete exit. You have took that cost, you've lost, and that's it. Basically, when you go into a restaurant and you purchase some food, if you don't eat half the food, you're still gonna have to purchase all the food. That's a sunk cost. Say you're buying a stock and you bought Google at $100 and you ended up selling it for $75. You have sunk costed $25 when you could have just held it and went on. Now, obviously there's different situations for how liquid in cash you are or how heavy you are. If you need the assets liquidated immediately, there's different situations. But if you're someone who has a portfolio like me and doesn't really have many cash responsibilities that required me to liquidate my asset, if you sold, you're just quite literally inheriting a loss for no reason. You know, there's a common notion going around right now to buy everything because it's super low. In hindsight and complete principle, yes, that is completely true. I think if you're super cash heavy, this is like a great time to make purchases and really safe investments at a cheaper price. That's just like modern investing principles. If you are already into a portfolio and you have, let's say worst case scenario, you're pretty heavy in like all the foreign manufacturing company and you're down like 15% long term, all you can do right now is buy. If you're selling, you're just going to inherit the loss and that's just going to be it. So I would buy. If I'm not I'm far from a financial advisor. I mean, I graduated with a bachelor's in a year, but I'm far from a financial advisor. But if you were to ask me, hey, Noah, what are you going to be doing next time your paycheck from the restaurant comes in? I'm going to tell you I'm buying because my Google shares are down. My MPH shares are down. My Boeing shares are down. So at the end of the day, I'm going to be buying. And that's just what I'm going to be doing to help mitigate the losses on my long-term account. Now, next topic we're going to talk about is trading. Let's make sure I'm still recording here. Hooray. We are still recording. Happy day. We are still recording. Happy days. So one thing I'm going to talk about right here is trading. And basically the best idea, strategy, sort of principle that you can implement during these times of high volatility. And that is depending on your win rate, no matter what, size down. When there is not necessarily enough confidence to go heavy, there's no point in going normal. You would go in light, mitigating the risk. There's no point in entering a trade that is a low probability trade, a high probability amount of position sizing. Just size down. You can make the same trades. the setups are going to be different every single day. I woke up today and I took a gap fill. The setup looked the same, but it's going to be treated differently. I just sized down. Did I end up losing out on some profit if I would have taken the normal size? Yes, but there's also a universe where you don't win that trade. There's a universe where you took the wrong trade, and that's just going to happen. Here's the thing, also in these times of volatility, is that option contract premiums are going to be way more expensive. They will move how they should, but they're going to be way more expensive. So you're getting very far out of the money contracts at this point if you are going to size down, which at the end of the day, with this much volatility, you'll still turn a profit. You still might end up hitting that strike price. That was weird. I saw a flashing light here. I got scared. It might have been my lamp. Also, for those that are trading and trade multiple things, one thing I would recommend is finding something to trade. It's finding something to trade that has tight spreads. What do I mean by this? During high volatility, the spreads are determined by how many people are actually actively trading that singular thing. Say you had Google and Microsoft. If there's more people trading Google, the spreads on Microsoft are going to be worse. What's a spread? Well, if I were to set a stop loss at $50, this is just completely hypothetical. Microsoft is not worth $50. But if you were to set a stop loss at $50, spreads might be so far that you might not actually find a buyer until a stock's at $49. That's how spreads kind of work. Now, I'm not an investing junkie or stock junkie. I'm more of just a throw your money at the market junkie. I guess the last thing to touch on for day trading is be comfortable not taking a trade. Look, there are many profitable traders out there that literally trade once a day. There's many profitable day traders that trade once a week. There's profitable day traders that might take 3 trades a month. So knowing when to take a trade is just as important as knowing when not to take a trade. I struggle with this. I go into every single day thinking I should take a trade, and ultimately I probably could have mitigated a lot of loss if I just didn't trade. But I'm a degenerate day trader. What can I say? All right, that's enough yapping for me. I feel like I am getting nowhere right now. We're going to talk about the trade that I took this morning. I opened up my trading view to one of the fattest gaps I've ever seen in my life. It was a 16.32 gap, so a 3.23% gap to the downside. And so I'm sitting here like, all right, my strategy is going to say take calls. I'm going to kill myself if I take puts, and I was wrong. So I took calls, but I waited because I knew that if I were going to see buying pressure, that I would see it at all. It would be pretty substantial. So I waited around 15 minutes. I ended up getting contracts around, what's the time frame on that? 9:40. So 9:40 was when I got these contracts, and I set my stop loss and I set my take profit at 100%, and we smacked it. The deltas weren't moving as much, so as you can see, the amount of price movement that there was actually a lot for a normal day. But because the gap was so large and the volatility was so high and the deltas were super low, that it took a lot more movement on actual SPY to reach my desired take profit of 100%. I ended up sizing down for these contracts. These were around $40 contracts that I ended up turning into $80 contracts. So obviously, if you look at the whole entire chart, you see that I missed out, and I think I missed out on like $800 on these $40 contracts. But I'm not going to predict that, and I don't feel like trying to predict it because I'm not a genie. So that was the trade this morning. First win in a minute, but it feels good to get a win, especially during this time of turmoil. But yeah, that's basically it, and I will catch you guys in the next video. Also follow the Crockett's Instagram because I don't want to shave my eyebrows. So yeah, I'll catch ya. Peace.